Welcome back to Investing Talk. Today, we're tackling a question that's probably on many of your minds when you're looking at specific companies. Is now a good time to buy this stock? And the company we're putting under the microscope today, based on the sources we've looked at, is ABVE Food Ingredients. We're going to try and pull out the most important facts and insights from the material we have, really to help you understand this particular investment opportunity. Before we really dig into it, if you find these discussions helpful, please take a moment to subscribe, hit that like button, maybe leave a comment. Your support truly helps us bring you more of these analyses. And look, if there's a specific company you'd like us to examine in a future discussion, just let us know in the comments below. Oh, and if you're feeling extra supportive, consider buying us a coffee. It helps fuel these conversations. Okay, so let's unpack this for ABVE Food Ingredients. We've got quite a collection of sources here, everything from fundamental analysis reports, technical data, even some insights into the company's competitive positioning.
Yeah, and what's really striking here, and the sources are pretty clear on this, is that ABVE Food is basically presented as a high-risk speculative trading opportunity. So our goal today is to lay out exactly why that is, drawing directly from the numbers and the market observations we found. We'll be looking at their financial health, how they're valued, recent price action, and maybe what potential upsides or, frankly, significant risks might be on the horizon for you.
So let's start with the absolute basics, the fundamentals.
Yeah.
What do the financials actually tell us about ABVE Food Ingredients?
Well, the core takeaway, when you look at the revenue and earnings figures, is that ABVE Food Ingredients, despite generating pretty substantial TTM revenue that's trailing 12-month, it's around US $213 to $250 million, or CA $294.8 million, according to Simply Wall Street. It remains unprofitable.
Okay.
And the TTM net loss is quite significant, somewhere around US 45 to 50 million. And maybe most worryingly, they're operating with a negative gross margin.
A negative gross margin. Wow, that's definitely a red flag. Can you quickly explain what that means fundamentally?
Yeah, absolutely. It's like selling something for less than it costs you just to make it before you even pay for rent or salaries or anything else. It indicates they either have very limited pricing power or they're facing really significant cost pressures, maybe both. It leads to what the sources call structurally negative unit economics. Basically, they lose money on every unit they sell at the most basic level.
Okay, that paints a picture. So what happened in 2023 then, and what does that suggest about their operational health?
Well, 2023 wasn't great, unfortunately. Revenue actually declined about 7% year over year, down to US $368.4 million. And the losses widened to US $53.3 million.
Oof. So less revenue and bigger losses.
Exactly. It suggests both, top-line softness, they're selling less, and a lack of operating leverage. That means as they operate, their costs aren't shrinking proportionally, making it even harder to reach profitability. The sources also mention there are no street EPS forecasts available. That usually points to limited analyst coverage and makes it really hard to predict future earnings.
Moving from profit, or lack thereof, to the balance sheet. How financially healthy is ABVE Food?
This raises another important question. The reported debt-to-equity ratio is shown as -84%.
Minus 84%.
Yeah, which likely reflects negative equity, meaning liabilities could actually exceed assets. It signals a very, very thin capital base and significant balance sheet risk. And while specific free cash flow details aren't provided in these sources, those persistent losses strongly imply cash burn.
So they're spending cash just to keep the lights on.
It certainly seems that way. And relying on external financing. Plus, with a small market cap, recently around, US 86 to 95 million, their flexibility to raise more capital is pretty limited, increasing the risk of share dilution for existing shareholders.
Right, so burning cash, potentially needing more, which could dilute current investors. Given all this, how does ABVE Food Ingredients position itself in the market? Is that position strong?
Well, the company positions itself as a vertically integrated supplier of regenerative ingredients. That's their angle. They operate in two segments: disruptive rudimentary ingredients and consumer packaged goods across North America and internationally. Now, this regenerative ingredient thing could be a differentiator, if they can improve margins. Taps into that sustainability trend.
But those margins.
Exactly. But their current negative gross margins suggest really significant execution and cost challenges, especially when you compare them to more established ingredient suppliers who have massive scale advantages. Also, their history includes a SPAC tie-in and a recent listing. The sources note that often correlates with higher volatility in operations that are still, let's say, evolving.
Okay, let's shift gears to valuation. With all these negative numbers flying around, how do you even begin to value a company like this?
This is where it gets really interesting, maybe even tricky. Traditional ratios like price to earnings or PE They're just not meaningful here because the company has negative earnings. You can't calculate it.
Right, no E and PE.
Precisely. The price to sales ratio, or PS, is low. It's roughly 0.4 to 0.5 times. That's based on their market cap under US $100 million versus that US $213 million or so in TTM revenue. Now, normally, peers and food ingredients with positive margins trade much higher on PS.
So that low PS looks tempting, maybe.
It looks tempting, but above food's negative margins and that balance sheet risk we discussed, they clearly justify this discount. And price to book, or PB, also unreliable if equity is negative, which that debt-to-equity figure strongly suggests.
So trying to build a discounted cash flow, a DCF model, that would just be too speculative.
Oh, absolutely. Without positive operating margins or any reliable analyst forecasts, a DCF would be pure guesswork, highly speculative. On a relative basis, sure, that low PS multiple could become attractive if, and it's a big if, management can somehow restore positive gross margins and stabilize revenue. But the current fundamentals, as presented in these sources, they just don't support any kind of re-rating in the near term.
What about the technical side then? For traders who thrive on volatility, what does the price action tell us?
Well, the recent price has been hovering around, say, US $1.76 to a number in 90. But its 52-week range is just wild.
Right.
From US $0.25 up to US $4.40.
Wow, that's a huge swing.
It really underscores the intense volatility and the kind of speculative trading interest you see around these small cap stories, especially when there are potential catalysts. Market chameleon statistical levels place support near US $1.35 and resistance around US $2.07. Those could be useful levels for short-term trade planning.
And what about indicators or overall trends? Anything stable there?
Not really. TradingView shows that market cap around US $95 million and, interestingly, a negative one-year beta estimate. But other sources show beta above 1, meaning more volatile than the market.
So conflicting data even on beta.
Yeah, that inconsistency just reflects a really unstable trading history since they listed. It should definitely be approached cautiously. The broad trend since the spring has been pretty choppy, just bouncing within that wide range. The sources don't give specific moving averages, so traders should probably just assume high volatility continues with potentially rapid swings between those support and resistance levels.
What does the news cycle or general sentiment say about above food? Are analysts covering it? Are insiders buying?
The sources indicate basically no consensus analyst coverage or price targets. That's quite notable. Even earnings date indications vary across different platforms, which again points to limited coverage and maybe data lags. We haven't seen any notable upgrades or downgrades surface in the cited materials. And as for insider activity, the provided sources don't show any significant insider buying or selling recently.
So no strong signal from insiders either.
Right. That lack of visible insider accumulation doesn't exactly boost confidence, especially for a company still in its early stages as a public entity.
Thinking ahead, what could be some potential catalysts, maybe short-term and long-term, that could actually move the stock price?
Okay, short term. The next earnings report. Given the thin coverage and volatility, whenever that report actually lands, because the dates seem uncertain, it could drive really large moves. Any update, any real news on margin improvement, cost controls getting traction, or maybe winning some new contracts, that would be significant near term. Technically, for traders watching the charts, a clean break above that US $2.07 resistance or a drop below US $1.35 support could trigger momentum flows, up or down.
And stepping back, what about the bigger picture, longer-term catalysts?
Longer term, if they can successfully execute on that vertical integration strategy and really make the regenerative ingredient positioning work profitably, that could be a game changer. Along with potential growth in their consumer packaged goods side or maybe strategic partnerships, even M&A activity, those could truly reshape their margins and how the market values them. But conversely, financing events like announcing another equity raise are also likely given their ongoing losses. Those are catalysts too, but potentially negative ones for shareholders due to dilution.
Okay, let's talk risk. What are the primary risks an investor absolutely needs to consider with above food ingredients?
The stock-specific risks are, well, pretty significant. You've got the persistent negative gross and net margins. You've got the potential negative equity we talked about, and the ongoing cash burn. Together, these create high dilution risk and even solvency risk, especially if capital markets tighten up and raising money becomes harder. Plus, that limited analyst coverage and the data inconsistencies, that increases information risk for you as an investor. It makes it harder to get a clear, complete picture.
And beyond just the company itself, what about broader market or sector risks?
Sure. As a small cap player in the food ingredients and CPG space, Above Food faces the usual commodity price volatility. The cost of their raw inputs can swing wildly. There's potential customer concentration risk if they rely too heavily on a few big clients. And there's just intense competitive pressure from much larger suppliers who have huge economies of scale. Plus, any macroeconomic slowdown could reduce volumes and pricing power across the whole industry, hitting a smaller, less financially stable player like Above Food potentially harder.
So wrapping this all together,
Sure.
if you were to give an overall assessment of Above Food Ingredients as an investment opportunity right now, based on everything in these sources, what's the verdict?
Look, based purely on the sources we reviewed, they give Above Food Ingredients an overall rating of 3 out of 10.
3 out of 10. Ouch.
Yeah, the rationale is pretty clear. While the stock trades at what looks like a low price-to-sales multiple, the combination of negative gross margins, sustained losses, a fragile balance sheet with that potential negative equity, and very limited analyst coverage just makes it highly speculative.
And for people thinking about their investment horizon, is this something you'd consider holding for the long term, or is this something else?
Based on this information, it seems much better suited for short-term trading only. The sources explicitly state it's not attractive for long-term investment until there's clear, convincing evidence of a margin turnaround and stabilized growth. That fundamental picture needs to change first.
Okay, so for the traders listening, are there any specific suggested entry or exit points based on that technical analysis we touched on?
For traders, the sources suggest maybe considering entries near that support level in the US $1.35 to $1.50 zone. But, and this is important, only if confirmed by price stabilization and volume. Don't just jump in blindly. It also advises against chasing breakouts without confirmation because these things can reverse quickly. A potential stop loss for a trade might be set around US $1.20 to $1.25, just below that recent statistical support level. But always adjust that for your own risk tolerance. Initial take profit targets could be near US $2 to $2 to $2.00, that first resistance area. Stretch targets might go towards US $2.50 if there's a strong catalyst. But given the high volatility, scaling out selling parts of your position as it goes up is probably a prudent approach. And just a reminder, data points can vary between different sources, so always treat these figures as indicative and try to verify against official company filings if you can.
So what really stands out to you from this whole analysis of Above Food Ingredients? For me, this company really embodies the complexity of evaluating a speculative play. You have these tempting low valuation numbers on one side, but then these really significant fundamental weaknesses and incredibly high risks on the other. It's a stark reminder, isn't it, that a low stock price doesn't automatically mean good value.
Absolutely. And it really raises an important question for you, the listener, to think about. When does a high-risk speculative opportunity actually transition into something more fundamentally sound for investment? For Above Food, based on these sources, it seems it would require a clear, sustained reversal of those negative margins and a real strengthening of their balance sheet. Until then, the sources strongly suggest it's pretty much a trader's game.
Food for thought, indeed. Thank you for joining us for this detailed look into Above Food Ingredients. We hope this discussion has given you a clearer picture of whether this particular stock might be a good buy right now for you and your situation. We look forward to our next conversation, bringing you more insights and knowledge.